In today's uncertain financial world, many people are thinking twice about keeping their money in banks. Why? Because governments have a lot of power over banks. They can freeze your account with just a click. This worries people because they wonder if their money is safe from government actions. Governments also want to control how much money is out there and how people use it. They decide how much you can earn, spend, and even tax you on your money. This makes people worried about their own financial freedom and if their savings are secure. Adding to these concerns is the rising inflation we see in many Western countries. Inflation means the value of money goes down over time, so people want to find ways to protect their money from losing its value. Plus, when banks fail, it shakes people's trust in them, making them look for safer options to keep their money. Overall, because of all these challenges, people are thinking differently about how they handle their money. They're exploring new ways to keep it safe from government actions, inflation, and problems with banks. Foreign real estate. The first asset to save money is buying foreign real estate. Investing in real estate across the globe could be a smart move. Take Mexico, for example. Property prices there went up by 12% last year. Many of our clients are putting their money into villas and apartments in Mexico. While it might not be the safest place to invest, the country is gaining popularity among expats from America, Canada, and Europe. This means property values are likely to keep rising in the future. Dubai is another example. Despite recent market shocks, property values have soared over the past few years. If you had bought property there in 2018 or 2019, you could have made a significant profit by selling it now. The same goes for Portugal, where property prices shot up by over 50% due to investors attracted by the Golden Visa program. Although prices are currently declining after the program was canceled, there were huge gains for those who invested earlier. In Bali, Indonesia, property values have skyrocketed, especially in areas popular with expats and digital nomads. Some of our clients have seen their land appreciate by as much as 300% in just 2 or 3 years. This first-hand experience shows how investing in the right place at the right time can lead to substantial returns. Montenegro is another hotspot to watch. As it prepares to join the European Union, property prices there are still reasonable compared to other European countries. Once Montenegro adopts the euro and officially becomes an EU member, property values are expected to surge. With many Europeans likely to invest in Montenegro, there's potential for significant profits on property purchases. Investing in foreign real estate can be a real lucrative opportunity for those willing to take the risk. While there are uncertainties and fluctuations in the market, the potential for substantial gains over time is hard to ignore. What are your thoughts on investing in property abroad? Let us know in the comments below. Buying precious metals. If you're not so much of a fan of real estate, then investing in gold and silver is also the way. Saving money in the form of precious metals like gold, silver, and platinum is often referred to as God's money due to its enduring value over time. Unlike fiat currencies issued by governments, which can be subject to inflation and fluctuations in value, precious metals have been recognized as valuable commodities for centuries. One of the biggest reasons why gold, silver, and platinum are considered valuable is their scarcity. These metals are relatively rare in nature, making them inherently valuable and sought after by individuals and investors alike. Unlike paper currency, which can be printed in unlimited quantities by governments, the supply of precious metals is finite, adding to their allure as a store of value. Moreover, precious metals have proven to be reliable stores of wealth during times of economic uncertainty. When traditional financial markets are volatile or currencies lose value, gold, silver, and platinum tend to retain their worth, providing a hedge against inflation and financial instability. This stability and preservation of purchasing power make them attractive assets for those looking to safeguard their savings for the long term. Industrial commodities. Transitioning to a discussion on industrial commodities. Industrial commodities are essential raw materials used in various industries for manufacturing and production processes. These commodities serve as the building blocks of modern economies, playing a crucial role in infrastructure development, construction, transportation, and manufacturing sectors. Unlike financial assets or precious metals, industrial commodities are tangible goods that are consumed or transformed during industrial processes. One of the most widely traded industrial commodities is crude oil, which serves as the primary source of energy for transportation, heating, and electricity generation. Other energy commodities include natural gas and coal, which are used for similar purposes but have distinct characteristics and applications. Additionally, agricultural commodities such as wheat, corn, soybeans, and cotton play a vital role in the global food supply chain and textile industry. The prices of industrial commodities are influenced by various factors including supply and demand dynamics, geopolitical events, weather conditions, technological advancements, and government policies. As such, industrial commodity markets are known for their volatility and sensitivity to macroeconomic trends and geopolitical developments. If you're not one to invest in safe haven currencies, we've got a surprise for you. Safe haven currencies. Moving into the realm of safe haven currencies, it's important to understand their crucial role in the global financial system. With fiat currencies that aren't backed by gold, people prioritize geopolitical stability when safeguarding their money. This is why many well-off individuals choose to deposit their funds in Swiss banks, as Switzerland is known for having a strong economy and stable political situation. In times of trouble like the Eurozone debt crisis or global financial chaos, people really want the Swiss franc. They rush to Switzerland to keep their money safe from losing value in other countries. Even during the Russia-Ukraine conflict, when things got heated with US sanctions, Russia chose to use Swiss francs, making its value shoot up. The Swiss franc isn't just popular in crises, it's also great for international trade. When things get shaky, investors trust the Swiss franc to keep their money safe. But for regular folks, getting Swiss francs can be tricky. While the rich can use Swiss bank accounts, smaller investors can go for currency ETFs and forex brokers to invest in the Swiss franc and keep their money safe and sound. Moreover, similar safe haven currencies such as the British pound and the Japanese yen have also demonstrated resilience during times of global economic turbulence. Value stocks mutual funds. Moving beyond cash, investors often turn to treasury investments for better returns. While these investments offer lower risk compared to stocks, they typically yield lower returns as well. For risk-averse investors, this lower risk is appealing, but many investors, regardless of risk tolerance, seek higher returns. Stocks present an attractive option for achieving these higher returns, although they come with their own set of risks. In the realm of stocks, there are two main types: value stocks and growth stocks. Growth stocks, like those in the technology sector, are considered riskier because they focus on innovative ideas and technologies that may not always succeed. On the other hand, value stocks, such as those in industries like industrial metals, are often viewed as less risky due to their established demand and stability in the foreseeable future. These value stocks typically offer steady price appreciation and stable dividends, making them appealing to investors seeking reliability. However, conducting thorough research on individual value stocks can be time-consuming and challenging for average investors. This is where dividend-focused mutual funds come into play. Funds like the Vanguard High Dividend Yield Index Fund Admiral shares provide retail investors with access to a diversified portfolio of dividend-paying stocks. These funds offer stability, affordability, and the convenience of professional management, making them an ideal investment option for those looking to build a balanced and profitable portfolio without the hassle of extensive research. As you think about where to put your money, it is important to think about what feels right for you. Do you like the safety of treasury investments, or are you tempted by the potential for bigger returns with stocks? Maybe you prefer the simplicity of mutual funds that focus on dividends. Now it's your turn. What kinds of investments do you feel most comfortable with? And what factors matter most to you when you're deciding where to invest? Share your thoughts with us in the comments below.